Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of October 11th, 2015. And it's going to be a pretty exciting week, I think. So we got that to look forward to. I want to take a look at a couple headlines, just one headline here to start off with. And this headline is from Bloomberg on Friday, and it says S&P index caps best week this year while energy rally ends. So we're going to look at both these things on the chart, but I want to point out a definition to you, and again we'll look at this on the chart. We'll talk about it a little bit. But here's the definition from Investopedia.com of a bear market rally, and I believe that's what we're in right here. This is a period in which the prices of stocks increase during a bear market. So if you've been following my updates, I believe, and I've been saying, and I still believe that we are in a bear market. A bear market rally is usually short-lived market increase followed by a period of market decline, and is followed by another period of market decline leading to a pronounced downtrend. That is my forecast. That's what I think we have to look forward to, and I think it's going to be fairly dramatic. But let's go ahead and take a look with this headline and this definition of a bear market rally in front of us and in our minds. Let's go take a look at the charts real quick. So here's the chart of the Dow Industrial average. It's the daily charts. Every price bar here represents one full day. And look at this rally. This is what I believe is what they're talking about, a bear market rally. Clearly we're in an overall downtrend, and this is moving up. Pretty remarkable. It's 9 days in a row of straight rise. We had one day here what's called a doji, where price, the opening price and the closing price were almost identical. But other than that doji, this is a 9-day run up. Trees don't grow to the sky, stocks don't move in perfect straight lines. So there's every likelihood that this is going to reverse, particularly when we have the context that we're in a bear market. So there's been some real enthusiasm, and the enthusiasm really is, like I've been talking about in my updates, good news is bad news is good news. When the Fed announced that they weren't going to raise interest rates in September, that's really when this rally started, this bear market rally started. And every piece of economic news that has come out is pretty negative about the slowing of growth in the global economy and pressures in the U.S. economy that would lead the Fed to not raise interest rates sooner, but rather to wait until things look better. So this rally really is being driven by bad news about the economy, which is translated into good news about the interest rate, but that's just not sustainable, right? The stock market rising on bad news doesn't really make sense, does it? And I think, again, the technical analysis here is that we're clearly in a bear market. So I wanted to look back in time just to point out some other examples where this has happened before. So we're looking at the Dow Industrial chart now, back at the end of '07 and the beginning of '08, when the dramatic bear market happened then. And if you take a look, the bear market had started, and here was a bear market rally, very similar to the one we're seeing right now. And you can see after that, another rapid decline, other, not as pronounced, but other bear market rallies. And as you watch, if you just look as this plays out over the duration of this decline, you can see that there were other bear market rallies that happened. So not unusual. It's part of how a trend unfolds, and I really do think that's what's happening right now. And just more examples. As this thing got more dramatic and kept going, there were certainly periods like the one we're seeing now, where there's a brief bit of optimism that the bad news is really over, but it's not, and you can see it continues to decline after these bear market rallies. I'll clean that off the screen there. So pretty normal part of the bear market is to have pull ups and these little rallies. So I think it will reverse pretty soon and head back down. The other thing that the Bloomberg headline talked about was the end of the rally in energy prices, that's an interesting thing to say. Let's look at the crude oil futures here for a minute. So here's the rally that they were talking about. It really started uh, late summer, late August, and oil prices have risen. But for them to say that the rally ended, here on this doji on Friday, um, I don't agree. I don't think that's the signal of an end. And in fact, what we do see in oil is a pretty interesting pattern forming. I've said before, I think we will see oil energy prices go up, and we've got this pattern that I've talked before about of a higher high, a higher low, and a new high being put in. Now this may pull back, but I believe it's poised to go on and make new highs, and it's got quite a ways to retrace. Oil prices have come down substantially, pretty much 50%, over 50% down from their highs. And then while we're here looking at these charts, let's go ahead and look at gold futures as well. Clean that off. So here's gold futures doing a similar kind of thing, where it looks like it may be coming off of a bottom. And again, I talked before, gold is often inversely related to the stock market. The stock market has been going up for 6 years. Gold has been going down pretty much for that same period. And it looks like it may have put in a bottom and have this sequence of new highs, lows. Now it needs to go take out this high. So it needs to go above this level here, which is at 1169.81. So if it takes out that high, I believe there's a good chance that gold may be heading up as the stock market continues to go down. I'll continue to update this. And the really good news is, the stocks that I'm picking for my subscribers, we're short on some, we're long on some. There are things that go up when the stock market goes down. So we're doing really well. We're making good profit. And energy stocks could certainly start going up as the price of oil goes up. So there may be some really great long positions on that. And I think there may be some investments, some places to go here on gold as well. But again, I'll keep publishing updates on that. Last thing I want to look at here is the economic calendar, the calendar of economic reports that are coming out next week. So there's some interesting stuff. This is going to be a busy week. We've got Fed members who are going to be on different forums speaking. So Monday and Tuesday we've got 4 of the Fed presidents of various regions who will be speaking. People will be poring over every word they say. Again, when they raise interest rates is really a big deal. People are watching for that and trying to read the tea leaves and the nuances of every word that's spoken. And so that could cause some volatility as they express their opinions and give updates. Then pretty heavy week for reports. We've got producer price index, retail sales coming out on Wednesday, and then probably even a bigger deal, consumer price index and jobless claims coming out. The Philadelphia Fed business outlook is a big deal coming out as well. So those things matter. So we'll see. They could have an impact and move the market. And then also on Thursday coming out is the petroleum status report. This is a big deal. It doesn't move the overall market that much, but it has a big impact on oil prices. And what this report is it's just showing the inventory of oil reserves. And so we have a ton of excess oil, supply and demand, and that's why the prices came down so dramatically. There was oversupply of oil, and the big oil producing countries have continued to produce a lot, but we had started to see reserves come down, that people were producing less and some of the reserves drawn down. So if this larger trend continues down, then we would expect prices to go up. So that'll move oil prices pretty dramatically. And then on Friday, we've got industrial production, which is a big report. So a lot of data coming out this week, a lot of people talking. I think we'll see some volatility in the market. And again, just looking at the technical chart, it really looks like we're poised to reverse and head back down. If I pull the Dow chart back up here, sorry, get back to the Dow chart. It's right there. Right, this thing's due to reverse and head back down. I had talked about this trend line. That's clearly been breached, so we can take this trend line off now. It's no longer relevant. I do think we will stay below this dashed green line here, and again, I think we're poised to reverse at any time. So stay tuned. I will continue to provide updates, and it won't be boring, that's for sure. Thanks.